Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, October 17th at about 1:30 p.m. Eastern. Well, major indexes have been all over the map today as traders are trying to move past credit concerns that sparked a big sell-off in regional banks yesterday. Plus, for the next 3 weeks or so, we're going into third quarter earnings season. And we're going to have market movers like Netflix announced in the coming week on Tuesday after the bell, and Tesla announcing on Wednesday after the closing bell. For another thing to think about, you may want to keep an eye on the VIX, the VIX, the CBOE Market Volatility Index, as I've noticed that it has definitely been heading higher in the past week. So you may want to keep an eye on that. And now let's go on to 3 charts that could give us some insight into the week to come. First, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $663. Just below last week's all-time closing high up here. We just have all-time closing highs, it seems like every week, don't we? At any rate, trading just below last week's all-time closing high at about 673. Now we know for the first time in quite a while, the SPY has traded this past week basically below the red line here, the 20-day moving average. Now, the 20-day is coming in here at 664. As I said, the SPY is trading just below it at $663. And for the past week, as you can see, the SPY has been kind of captured between the 50-day moving average, which is now coming in at $654 and change, has been trapped, sitting on the 50-day moving average, but kind of trapped below the 20-day moving average, at least for this week. And of course, speaking of moving averages, the black line down here is the 200-day moving average, coming in now at 604.90. We can call it 605. Now, we know that earlier this year, look left on the screen with me, the market was moving higher and made its all-time highs in February, and then started rolling over like everybody else did down to that April 7th low. Everybody made an April 7th low. It rolled down to 482. Then the SPY rebounded and started heading higher. By then, its moving averages were inverse. So the 20-day was down here, the 50-day was here, and the 200-day was here. So that was inverse. But the SPY climbed right through them. Got to give it credit here, up to, I think it's 595 on this high, and walked up the red line, walked up the 20-day moving average since in May. Walked up that 20-day moving average all the way up to where we are now, again, at 663, and that's been a 36-37% gain. Pretty darn sweet, and pretty cool considering it was up like the last couple of years before that. This week, however, and you can see that the 20-day moving average, the red line, has really acted as support for the SPY until this week, and it started getting tired, which is totally normal. The SPY has stepped down to the 20-day moving average, and again, it's now using its 50-day moving average for support. So going forward into next week, what do we have here? We have potential resistance at right here where it is at 664, and then on up to 673, 674. We have potential support at the 50-day moving average at 654. We have this August pivot down here at 619. We have the 200-day moving average coming in at 605. Plenty of potential support here. That's coming in about the same place. Plenty of potential support here should the SPY need it. So again, next week is the big beginning of third quarter earnings season, and the CPI, Consumer Price Index, will come out on Friday. So please fasten your seatbelts. Our second chart today, our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, the Qs follow the NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market, including the big dudes like Meta, Netflix, Apple, Tesla, that whole group. Now, when I captured this chart today, the Qs was trading at $601 and change, down a few points from last week's all-time high up here at 612. So right now, when I captured it today, the Qs was trading just below its 20-day moving average, coming in at 602. So all about the same here. Certainly above its 50-day moving average, the green line, which is coming in at 587. And of course, the 200-day moving average down here, coming in at 531 and change right down here. So we know that, like the SPY and about everything else, that we know the Qs rolled over back here. Look left with me, please, from February, March down to the April lows. On April 7th, the Qs rolled over and dropped to 402 and then rebounded with the inverse moving averages like the SPY had, and then rallied up and, like the SPY, pretty much walked up its 20-day moving average ever since. It finally managed to bounce up in May, and then the 20-day crossed over the 50-day and the 200-day, and the Qs pretty much walked right up this 20-day moving average pretty much the whole time. A few days under here and there, but not much to write home about until we're back up here. And you know what? This is a 49% gain from the April lows to where we are now, is almost a 50% gain. So no complaints, right? So what do we do with it next week? We see that the Qs do look like they may be getting a little worn out, may need a little breather here. There's a lot of overbought stocks. I mean, I looked at chart after chart after chart. There are a lot of really overbought stocks, so we'll see. Looking into next week, resistance is up here at 612. Potential support at the 50-day moving average at 587. We have the September and the August there, and September here. Support pivots at 552, 559. We have the 200-day again down here at 531 and on down. So what I would do, and I've been saying this now for the past month, please consider tightening up your stops a little bit on short-term trades, okay? Every market has to take a breather. Markets move in cycles. They don't move straight up. We wish, right? They don't move straight up or hopefully straight down forever. And, you know, maybe we're going to get a little pause here. October can be bumpy. Our final chart today is a daily chart of the Consumer Staples Select Sector Spider Fund, the XLP. As you see here, I'm getting a little more, quiet here. The XLP has 37 holdings. The top holdings are Walmart, Costco, Procter & Gamble, Coca-Cola, and Philip Morris. Please know here that these stocks, I give them to you in case you want to look at them. I looked at KO, Coca-Cola. That actually looks pretty good right here. So just saying. So when I captured this chart today, the XLP was trading at $79 and change. It's come down here, so the moving averages are inverse to the price pattern. So you can see here that the 20-day moving average, the red line's coming in at about 78. The 50-day is up here, actually overpriced. The 50-day is at 79, and the 200-day is just above it at 80. So price is trying to move up here. the last year has been really tough on staples because most traders and investors, face it, have been focused on AI and technology. So when that happens, money comes out of staples and all the things we have to have, the staples, which is food, medicine, and so forth, and goes into technology stocks. It makes perfect sense. But now, as it looks like the tech sector could take a bit of a breather here, and as we head into third quarter earnings season, I'm looking for a place that's a little more quiet. And I'm thinking this less volatile sector may be a good place to think about. So if we look left on the chart, we can see that the XLP made an April 7th low at about 76 here. Then it rallied straight up here, pretty much up to 82. Then started consolidating in a range here. Actually, that wasn't 72 up here. This is much higher, up to about 82 is what I should have said. Then started consolidating in a range here. From 79 to about 83, the range got smaller here, which is a good thing, technically speaking. So it basically sidestepped or consolidated along all three moving averages, which moved together through May, June, July. It popped up quickly in August, and then it fell back down here, back down through its moving averages. Down here in October, it fell to $77. And again, tech stocks were doing so well that most people are putting their money in tech stocks, but that may change for a little bit of time here, certainly not forever, but for a little bit of time. So again, earlier this month, it fell to 77, then started higher in this past week, moved up above the 20-day moving average to where we are now at about 79. So in the coming week, I'm going to keep an eye on this. In the coming week, if the XLP can stay above its 20-day moving average, if it can basically, let's say if it can stay above $78 and the market's behaving reasonably well, I'm going to buy a small position. And I'm buying small because I realize it's trading beneath the 50 and 200-day moving average. So I will buy a small position of the XLP if it can stay above 78 in my trading portfolio. And I'm going to put a stop down here at $76.75. If you want to put one farther away, that's up to you. If and when the XLP can move up and trade over 81.50, I want it up over these moving averages. If it can trade up over 81.50, I'm going to add to my position, and by then, of course, my stop will be a trailing stop. So you may want to keep an eye on the XLP in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. In my trading program, How to Bottom Fish Like a Pro, you'll discover a simple yet profitable strategy that all traders and investors want to know. We all want to know how to buy low and how to sell high. So I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, and that could be weeks, it could be months, when to take your profits. Our new low price for this program is only $199. And by the way, some of my trainings listed here are priced at only $59. So when you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, to how to swing trade successfully, very popular program, how to trade the trend to profits, another one of my favorites, how to read charts, 3 winning setups, and bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.